Hello everyone, welcome back to the channel. Today we are going to talk about Lemonade stock, ticker symbol LMND. Everything that has happened or everything the company has done since my last video back in August, and we'll also update you guys in my position and thoughts about the company and their Q3 earnings. Please smash that like button and subscribe since it really helps my channel out. Remember, I have a completely free Discord group chat with the link for that is down in the description below, as well as a 2 free stock with Webull when you deposit $100. So if you have watched my past videos about Lemonade, you already know that I absolutely love this company. I love that they are trying to disrupt a dinosaur industry, a very old industry in which the companies within the industry have been around for about 100 years or even more. But Lemonade is trying to innovate the industry with an excellent ideology and huge technology. Plus, they are also trying to change the way people think, since most of us just don't like insurance companies and don't ever want to deal with them. The way they are trying to do this is by making their company a friendly technology insurance company in which they provide excellent customer service. Also, another difference between Lemonade and other insurance companies is how they make money. It's not a secret that insurance companies make money by not paying your claims, and that's the truth. On the other side, Lemonade treats the premium you pay as if it is your money. They just take a flat fee from your premium, pay your claims with the rest of the money, and if there is any money left by the end of the year, they donate it to the cause you care about. But first, let's analyze their earnings, and then I'll show you some screenshots that a member of the Discord group chat sent, since he uses Lemonade as an insurance and already made a claim, and then I will update my position. Take into consideration that I'm filming this video on November 11th, so Lemonade is trading at $57.90 per share, and it went down today 12.17%, which we are going to see later in the video why that happened. It has a market cap of $3.27 billion. To start, they reported a customer growth of 67% year over year, since now they have over 941,000 customers by the end of the third quarter. Also, their premium per customer has grown 19% year over year to $201 per customer, which is excellent since it is not only growing year over year but also quarter over quarter. Last quarter, their average premium per customer was around $190. So obviously, us seeing this number increase is excellent. Their in-force premium grew 99% and their gross earned premium 104% year over year. In this other chart, we can see the evolution and massive growth over years. Even though we're in a pandemic, Lemonade had a stronger quarter, better than what they anticipated in several segments of the company. One of the things I like the most about Lemonade is how they are planning to grow as a company. They are mainly targeting younger generations that have never had an insurance policy. People that will start with renter's insurance, then a pet insurance, and sooner or later they will need a homeowner's insurance, life insurance, and more. So if Lemonade offers excellent customer service and excellent service, they have the potential to grow massively with younger generations. And they reported that their IFP generated by Lemonade's renters graduating to become a Lemonade homeowners grew by over 300%, which is excellent. With this, they proved that acquiring renters at a time and cost that incumbents struggle to then delight them, so that as their insurance needs grows, they grow with us. And the best part of that is that on average, the premium per customer for graduate sextupled to almost $900 upon graduation. And obviously, this is excellent for the company because it demonstrates the potential in growth that Lemonade is offering. Then they launched their pet health insurance last quarter, and apparently it got off to a strong start. The effect is significant. The median premiums for customers who added a pet policy jumped by almost 4 times. This boosted our dollars retention while further improving our lifetime value to CAC ratio. Later on, they explained that while their lifetime value and their CAC ratio increases, their readiness to spend more money on marketing to acquire more customers would increase as well, because it brings excellent return in the long term. As said in other videos, the pet health insurance industry is massive and is going to bring way more customers to their platform, and surely that happened. 40% of their pet policies were sold to new customers, and about 5% of them have already added renters. To newcomers delivers about 9 times more IFP than we generated from renters, which means that these people that started with Lemonade for pet health insurance like their service and decided to start with them as well for other types of insurance. Now, they report a total revenue of $17.8 million, which is a decrease of 18%. Their gross profit increased year over year, as well as their gross profit margin from 21% to 41%, and that is incredible. Still, reported a net loss of $30.9 million, which slightly improved from $91 million last year, meaning that even though their revenue decreased, their net losses decreased as well, as I imagine they have been able to improve and reduce their unnecessary expenses. The company's cash and cash equivalents and investments totaled $597.4 million compared to the $330.9 million as of December, primarily reflecting the net proceeds from the initial public offering of $335 million, partially offset by $71 million to cash used in operation. They have total assets of $831.5 million and total liabilities of only $262.5 million, meaning that they only have 31.5% of their assets in liabilities, which obviously for a money-losing company and a high-growth company as Lemonade, it is really impressive. Now, on their guidance for Q4, they talked about life insurance. They are planning to bring the life insurance product in the next 90 days. Still, they mentioned that teams we respect at other tech-enabled insurance companies have at times struggled to make the economics of digital acquisition work with term life policies, and we offer no assurances that we will face any better. Meaning that they know other companies that haven't done well with life insurance and that they are going to do their best, but do not assure that it will be any better than with other companies. The thing is that they are placing this bet because of the expected value, which is really high, since it is a segment that pays off very well, and if they are able to do it right, it will pay them off very, very well in the long term. It is important to know that they are not underwriting the term life policies themselves, since they are partnering with another company to launch this product. But they will still be able to collect data from customers and improve or innovate even more their company. This is a huge new segment since the global term life insurance market stands at $800 billion this year, and it is expected to grow more than 10% to over $2 trillion by the end of the decade. So my thoughts on this are that Lemonade needs to find a way to make this work, which I think that with technology and data collecting could be possible, and that will pay them off in the long term. For Q4, they are expecting an in-force premium of between $200 and $205 million and total revenue of between $18 to $19 million. Then for 2021, they are projecting a revenue of between $91 to $93 million, which is slightly lower than what analysts are expecting, since analysts are expecting a revenue of $107.9 million by 2021. And this is one of the reasons why the stock dropped hard, because their 2021 guidance was lower than analysts, and also because the revenue dropped in comparison to the same period last year. Now, in my opinion, they had a very good quarter. Yes, I know their revenue dropped, but their net loss decreases as well, as they are reducing unnecessary expenses. Also, they were able to almost double their cash and cash equivalents and investment in the last 9 months. Then their customers and premium per customer grew by a lot year over year, and their new pet health insurance was an excellent addition to their portfolio and have been helping them with their growth. As you can see, Lemonade is only available in some states here in the US and only 2 countries in Europe, Germany and the Netherlands. This is one of the things that attracted me the most to Lemonade stock, because it is a new company that has a lot of growth potential ahead, since they still have a lot of room to expand. Well, on September 15th, they announced that they are expanding even more in Europe, since France is their next stop. They are planning to start in France by the end of 2020, but French residents can already sign up for a wait list now. So a member of my Discord group chat uses Lemonade as pet insurance for his cat and sent me very important information to learn even more about the insurance, since they are not still available in Florida. First, thank you to him, because he sent literally everything I needed to know about the company. I'm going to be passing some screenshots here, but the plan that he got covers 80% of those costs with no deductible up to $20,000 per year, which is the plan he decided to get. If you have a pet here in the US, you know how expensive everything is, and you definitely need any type of insurance for any kind of emergency. For example, a friend of mine has a golden retriever, and the dog was playing with his toy and swallow the plastic part of the toy that makes noises, and the surgery was like $5,000. Without insurance, that would be a very, very expensive and unexpected expense. So our process to file a claim is really easy. First, you start the process of the claim through the app, providing all necessary information plus all the vet receipt to prove your claim. If you want an example of the pricing, for an 8-year-old cat, he pays $33 per month, but for a 1-year-old cat, it's $16 per month, which is a rate that increases while the cat ages, as it happens with humans. And then they offer a 10% discount if you use Lemonade as your home insurance as well. Now for the claim process, you just go to the app, start the process, and everything, and you are done. According to him, the process was super easy, took him 2 minutes to do everything, and certainly his claim was approved. Now, I started investing in this company in July with a small size position and have been averaging down since then. As a long-term investor, I do prefer to buy the stock below $50, but I started buying at a higher price and starting to average down every single month I see an opportunity. I last added to my position on October 30th when the stock was around $49 per share. Right now, I have an average cost of $56.74 per share, and it counts for 7.17% of my portfolio, so I'm up 6.25% today. Right now, I consider this as a mid-sized position according to what I'm willing to invest in this stock. I do have into consideration the lockup period that is ending in January, where we might see a lot of volatility. So I'm willing to take the risk, and I'm also willing to wait to buy even more if it drops. As you already know, I'm very, very bullish with Lemonade stock in the long term. I do not recommend this stock for someone that is looking for a quick return, because it might not be the case. As you can see, the stock has been almost flat or even down for the whole year, and that is why I'm trying to add to my position every time it gets below $50, looking for an excellent return in the long term. You guys know I'm not a financial advisor, but with this type of growth stocks, we need to be patient, and even more since they are practically new, since they went public this year and the company was founded 5 years ago. Thanks everyone for watching. Please smash that like button and subscribe since it really helps my channel out. Thank you, and see you next time.